EFT, which is an online currency broker. Kathy, welcome.
Thank you.
Okay, so characterize the dollar's position right now ahead of the Fed. Let me go ahead and pull up some of those pairs for us so we have it.
Well, what we're seeing is that we're seeing an interesting shift because on Friday, when we had the non-farm payrolls report, everyone was talking about how, okay, now fundamentals are driving the dollar, not risk appetite. But what we're seeing today, actually, is that the dollar is stronger against the yen, but it's weaker against a lot of the other high-yielding currencies like the euro, the British pound, Australian, Canadian dollar, for example. So what that tells us is that risk is once again coming back into the picture. And I think that this is really important going into the Federal Reserve meeting because it gives us a sense of how the dollar could react to the different comments made by the Federal Reserve, because now we know risk matters much more than fundamentals right now for the dollar.
So people then aren't looking, or are they looking at the dollar? Will they going forward rather as a safe haven?
Well, I think to some degree they still are, because what we're seeing today is that if it wasn't a safe haven play, then we wouldn't see the dollar move differently against the yen and the high-yielding currencies. So I think the best bet here really is to focus on dollar-yen, because it tends to have the most rational reaction to any type of U.S. data. Because, yes, right now risk is driving the dollar, but, after 215, fundamentals could drive it again. But for the dollar against the yen, that really is the currency pair, I guess, that would be best used to express pre and post FOMC views, because it would react most logically.
Okay, so dollar yen right now is 96.11. The dollar is 0.1% higher. So then what do you want to hear from the Fed? There are so many issues on the table with the asset purchase, TALF, the overall statement, its description of the economy at all. What's going to be most reactive to the dollar?
Well, there's three central questions I'm looking to be answered. First of all, are they planning to increase the asset purchase program and follow in the footsteps of the BOE? And I don't think that's going to happen, because clearly economic data has been doing better. Credit has been a little bit more growing healthier in the U.S. than it is in the U.K. So there's no need to increase the size of the asset purchase program now. Second question is, will they upgrade their assessment of the economy? I think yes, because they sort of have to, given the improvements we've seen on the employment level. But the key is, how much of an upgrade will they give? Will they actually stop saying that the economy is continuing to weaken? Will they start saying that it just has weakened? That's really the big potential for some price action volatility in the markets. And the third one is, will they talk about exit strategies? They may hint of it. They disappointed the last time around. I'm not expecting any specific comments on exit strategies. So the only thing that can move the dollar is the comments on the economy.
Okay, so long-term then, dollar versus euro, say, where do you expect that to land? It's 142.20 right now.
Because I'm expecting a positive outcome from the FOMC, and I do believe that the Federal Reserve would acquiesce and talk up the economy, that's why I do think we'll see a little bit more of a rally in the euro dollar, if risk appetite continues. But really, like I said, dollar yen is the cleanest play. So what I'm looking for is, if the Fed is optimistic, we'll probably touch 97. If they are not, however, the reversal could be sharp and significant.
And is anything in your outlook, are you looking at the 10-year auction that was a little bit soft here? Investors kind of thinking, okay, if the Fed kind of pulls out of its port of buying U.S. treasuries or wraps up as expected, that might be a little bit of a concern.
Well, I actually think that if they say they're done purchasing, that actually would be perceived as a dollar bullish story, particularly against the yen, because that would signal, I think, that the worst really is over and that things will get better. And because of that, that would be a first step towards exit strategies.
All right, Kathy Lien, thanks so much for joining us. Kathy's a currency strategist. All right, so we know the female gender is